Software Solutions Private Limited. Ramprasad is a passionate insurtech leader with a good depth of knowledge in insurance and a wide breadth of experience across multiple functions in IT. Ram is ACII qualified from Chartered Insurance Institute London and brings over 2 decades of experience in the insurance and IT domain. Before co-founding iNube Software Solutions in 2010, Ram worked with large insurance companies like Royal Sundaram, Oman Insurance Company, and Qatar Insurance Company. So as ED Executive Director, Growth, Ram is responsible for the sales and marketing function at iNube Software Solution. So may I request Mr. Ramprasad Sanjeevi to join us on stage to present his topic on insurance tech, cutting through the noise with iNube. Welcome, sir.
Is being connected. I would like to thank FIS for creating this platform and also giving us an opportunity to come and present here. Before I start with my presentation, I would like to acknowledge that Bajaj, Mr. KV Deepu just spoke. Bajaj is one of the pioneers in digitization and automation and have been on the forefront of driving technology in insurance in India. And we are happy to be associated with them on one of the key major lines of business. I mean, we are doing the digitization for them. So we know what they speak, and they are one of the pioneers. I just wanted to acknowledge that. So getting started with my presentation. So I come from an insurance background, like the presenter just mentioned. And my company, iNube, we provide software solutions to insurance sector. And today my presentation is going to be around insurance and insurance distribution in particular. So to start with, let's look at the insurance market overview. Globally, the insurance market, the market size in India, this is not the global figure, the market size in India is about 131 billion today. So this is about 1.72% of the global share of insurance. And India ranks 11th in the world when it comes to the insurance premiums collected, the gross written premiums of insurance. And the rate of growth post the liberalization of insurance in 2000 has been around 17% CAGR. The industry has been growing quite steadily at 17%, which is much faster than other markets. But still, the penetration is 3.8% only. So if you put this in a global context, the global penetration, the insurance penetration, when I'm talking about insurance penetration here, it is the percentage of GDP of the country. So here in India, it is 3.8%, but globally, it's around 7.3% on an average. And with bigger nations like leading economies like US and UK, it's over 11%, which means the insurance is bought. I mean, it's not sold there, it is bought, and people understand the value of insurance. And there is, like Mr. Deepu also mentioned, the premium values are higher. The insurance is being fully utilized in these markets. Now let's try and understand what are the reasons for this lower penetration in India. So let's understand that why penetration is still low and what is the potential reasons for that. One of the potential reasons is the awareness. So many people in India still are not aware of the insurance, what benefits insurance can provide. If you look at some of the government has taken many initiatives. They have launched many schemes which will benefit the rural public. But they don't know that there are such schemes which exist, and they don't know that they can benefit. Even with the urban population, the awareness of why certain things, awareness of availability of certain products, how they can cover themselves with insurance is still not there. And that is leading to a low penetration. That is one of the potential reasons. The other reason is ease of buying insurance and availability. So the insurance is available. Even if the insurance products are available, it's not available at the point of sale. It is not readily, people when they want insurance, it is not there at that point. And that makes it even more difficult for people to leverage the benefits. The product availability, the product suitability is another thing. So there are products which are not designed to keeping the customer in mind. So they are designed to probably push certain regulations, push the insurance company's vision. But these things are also causing the penetration to be lower. And finally, the distribution network. Today, the insurance companies are largely dependent on the distribution network which is built by their own teams. There is a network of agents, there is a network of direct employees which are distributing the insurance products today. So this again is giving a limited scope for the market to have that reach. Now, with the lower penetration levels, the aspirations are higher. So there is a lot of push in the industry. Now is the time where there is a lot of changes happening in the industry. So what are the aspirations of the industry today? So the industry is expected to grow to 222 billion. So that's roughly about 70% more than the current state in the next 5 years. There is a mandate from IRDAI to push the penetration up by 1.5%. This 1.5%, just to put in context, we are currently at around 3.8%. To push it up by 1.5%, it is not an easy task in the next 5 years. So there is a lot of this IRDA expects this growth will largely happen in the general insurance and the health insurance sectors, because that is where the insurance has not reached the general public. And especially to those who are among the lower income group and those who are in the last mile. So these are the people who have yet to benefit from that, and that is where there is a aspiration to push this penetration there. And also there is a push for moving the insurance from what is being sold today. Customers should realize and they should buy it. So which means that there has to be an increase in awareness among customers. And to establish a complete ecosystem of varying stakeholders. Today, the stakeholders who are who are distributing insurance are largely from the insurance fraternity. Why not include the other stakeholders like the banks, like the fintechs, like the financial institutions, e-commerce players into this? Why don't include them? So it is putting a framework which will encompass all these players in the ecosystem to increase the penetration. Now, what are the key initiatives taken by IRDAI, which is a regulator of insurance? So, one of the first and foremost change which IRDAI has brought into the new chairman is it is moving from a rule-based approach of regulation and supervision to a principle-based approach, which means that the regulator is taking a step back here and they're letting the insurance companies decide what is good for them, and they're laying down the guidelines under which the insurance companies can create products, they create distribution networks, etc. So this is a big shift because it is enabling the system to remove the bureaucracy and the speed to roll out newer offerings to the market. So this is a big change, and also under this principle, one of the first regulation that was passed was on the use and file framework. So people from the non-insurance industry might not be aware, but in the insurance industry, the earlier framework was file and use, which means that the insurance companies had to do a detailed analysis. Their actuaries had to price the products accordingly. They had to collect a lot of data, ensure that the solvencies are there and solvencies are met, and these are presented to the regulator. The regulator goes through this entire thing, and if the regulator feels that the product is viable, the premiums will hold good, then only the regulator would approve the product. So this would typically take about 6 to 8 months time, 6 months to 1 year in many cases, to roll out such products. So, but now under the use and file framework, the insurance companies are now allowed to design their own products, use new data points, create new offerings, and with the approval of their board, they can roll out these products into the market. As long as they they ensure that the policyholders' interests are met, which is now the responsibility of the boards of those insurance companies. The insurance companies are free to roll out products. They can subsequently file these products. How this impacts the insurance distribution? Today, the insurance distribution has limited set of products to be taken to their customers. So with this use and file, this opens up multifold. So we are talking to, as a software provider for multiple large insurance companies, we are talking to insurance companies of various sizes. And what we come across in the discussions, we are actually pleasantly surprised with the thought process that the insurance companies are going through today. They are thinking of products which have never existed in the market today. And they are thinking of objects which have never been covered under insurance. So these are the kind of things which will come. And they're also talking about things which will simplify the insurance purchase. They want to ensure that everything is very simple, right from purchasing the policy to making a claim, everything is simple. All these are covered under the use and file, because use and file will change the entire landscape of insurance. Then the regulator is also allowing the number of insurance tie-ups to go up. So currently, if you look at many of you here are financial institutions, you must be corporate agents of insurance companies. So the current regulation allows only 3 tie-ups with insurance companies under each segment. But there is a proposal to increase this to 9. How this helps is, this will increase the options that you can give to your customers. There are many more options apart from your regular insurance products which you typically bundle with your products or services. You can actually provide many more options. You can offer traditional insurance products and also provide options for many other insurance companies to be taken to your customers. And then there is an introduction. We have been, as a privilege, we've been in discussions with the regulator, where we have been discussing on combi insurance products for the micro insurance segment, for the rural segment. So the combi insurance products is a new concept where the products from different lines of business, like your general insurance, life insurance, health insurance, these things, if a customer has to buy these products, they have to go to the respective insurance companies and buy those products. But if you look at it from a rural customer point of view, they might, firstly, the awareness is low, and then if you expect them to go to different insurance companies for buying a policy and then subsequently making a claim, it becomes even more cumbersome for such customers. So to make it simple, the regulator is thinking of combi insurance products where the covers are going to get bundled with one another. So life, general and health insurance products can be packaged and offered to a rural customer. Be it, say, something like a two-wheeler insurance with accident cover and health insurance, life insurance. These can be bundled, and all the basic needs of the insurance needs of the customer are met, and these can be taken up to the market. But the challenge is, because insurance companies have their own network, how will this be taken to the customer? So this is not possible to be taken to the customer directly. So here is where the other networks, so the banking, financial institution, especially the cooperative banks network will come into play, and there is an expectation that through this network, such products are taken to the market. Then there is also a couple of other large initiatives, innovative initiatives from the regulator. One is Bima Manthan. So the regulator is thinking forward now, and they're with a very open mind. They have come up and presented problem statements which they have seen in the industry. The problem statements, there are multiple problem statements, like how do we increase penetration in the rural area? How do we improve the claim service, etc. These are some of couple of examples of the problem statements. They have published this as a hackathon. They have given a challenge. They are inviting the public and insurtechs like us to come and present our ideas and also solutions for this. And they're also setting aside rewards for this. So we are participating in one such hackathon. And this again shows the intent of the regulator here. The regulator is wanting to ensure that the problems in the industry is solved, and this will pave way for higher insurance penetration. And lastly, the Bima Sugam. This is another very big desire that the regulator has brought in. So here under this, there is a platform which is envisaged, which will converge all the stakeholders on a single platform. Right from buying policies to renewals to claims, from different insurance companies can all be managed on the single platform. This is an ambitious project, and this will take some time, but this is already on the roadmap. Now, having spoken about the aspirations and the role of the regulator, now why does the role, because I understand that the audience here is largely the banks, financial institutions and fintechs. So let's understand the role that you can play in the insurance industry. It is a very key role, and we need to understand why this role is very key. So today there are, as customers, as consumers, we have multiple touch points with the banks, NBFCs and financial institutions. So there are payments that we make, there are so many transactions, financial transactions that we do on a day-to-day basis, wherein there are touch points created with the end customer. But if you look at it from an insurance point of view, the insurance companies today have very limited touch points with the end customers. The touch points only comes once in a year when the policy is being issued, or if there is a claim, there can be another touch point. But otherwise, it's only the next year. So here is where the banks and financial institutions can, being a facilitator of financial services, you can include insurance as an offering and increase the value for your customers, and also make sure that the availability of products is there for your customers. So the products which the insurance companies create can be taken to, made available to the customers through this channel. This primarily holds good for the rural segments, tier 2, tier 3 cities, where the penetration is still very low. Now, in terms of, let's look at some of the technology trends in insurance distribution. So the last few years, there has been a significant change, and these are some of the significant changes which are happening. Firstly, the online purchase of insurance is becoming the preferred channel. So many of us today, when we have our car insurance renewal coming up, we go to a web aggregator, we go to a portal, and we try to buy it ourselves, because we know that the car insurance is mandatory and there are multiple options available. Which is the best option? We choose that and we take that forward. So this is becoming very prominent, and especially post-COVID, there's a 40% jump in the online purchase. And secondly, the purchase where, the journeys where customers are comparing options available. So there are multiple portals available where the customers are able to compare the options provided by different insurance companies and buying those policies. So that has also increased over the last couple of years. The second trend is increased availability of insurance products at the point of sale. So now all of us know that there are, when you book an Uber ride or an Ola ride, you can opt for insurance. Similarly, when you buy a ticket on Make My Trip, or when you book a train ticket on IRCTC, you get an accidental insurance cover. So these are bundled, these are embedded insurance, and these are bundled. But how many of us know that the insurance companies are thinking of including such embedded insurance products in our day-to-day lifestyle? So like for example, even when you buy a shoe, there can be a protection for your shoe. There are, when you buy a shirt or when you buy spectacles, there can be insurance covers available for this. And all this is called lifestyle insurance, and this is hitting the market very soon. And through embedded insurance, the penetration can go up much higher, and the need for insurance is already established. The customer knows that, okay, they are buying a valuable product, and for that valuable product, they need to have enough protection. So that need is established, and this embedded insurance is playing a major role. And to facilitate this embedded insurance, it requires a lot. So the insurance companies are simplifying everything at the background and then making it completely seamless for straight-through processes to go through for underwriting, claims, and all the other transactions related to insurance. The third trend is that insurance is moving towards an open API architecture. This is not yet relevant in India, but globally there are APIs available for insurance product, which means that it's so standardized that the insurance product, let's say if you're talking about a credit-linked insurance, or if you're talking about a warranty for any product that you purchase, these things are available as an API, which means anybody who's a distributor of that service can simply consume. They don't have to talk to an insurer. They don't have to talk to anybody else. There's an open API available, and this API can be consumed and bundled into their offering and distributed. So this is how the industry is trending, and this will soon hit the Indian market too. There have been discussions with the regulator to provide such open API for certain products in the insurance space. And finally, the tailor-made insurance products. So there are many affinity groups. All of us are part of some of the other groups, and for each of us being part of that group, we have certain characteristics. For these for these affinity groups, there are special products designed, and these products are taken to affinity through these channels, through the affinity channels. So these are specially designed products and distributed through affinity channels. So these are some of the key trends in insurance distribution. Now, having understood the trends in insurance distribution, how can iNube help? We are one of the leading players in InsurTech. In fact, when we started iNube in 2010, our intent was to build products for the insurance sector, host it on cloud, and offer it on a SaaS model. And we were one of the earliest in the industry, I would say much earlier than many others here. So to offer products on a SaaS model way back in 2011. Our product was a product called Claims Live, was hosted on Microsoft Azure in 2011, and we offered that on a SaaS model for insurance companies and TPAs to manage claims under the RSBY scheme. Now, like I mentioned, we started off in 2010. It's been 12 years now, and we've been supplying technology, software products for the insurance companies largely, the insurance carriers largely. We provide many complex solutions. We have solved many complex problems for them, and we provide solutions across the value chain. So we provide solutions for underwriting, we provide solutions for product innovation, claims, insurance, and we bring in a lot of domain expertise. We have with us Mr. Moti here and Harbinder Singh here, who are veterans from the industry. So we, like this, we have many other people from the insurance domain. We understand the insurance subject very well, and we marry this with technology. And that's been our specialty, and that's why many of the large insurance entities work with us. And today we are happy to announce that we are also extending our offerings to the intermediary segment, which is the insurance brokers, the corporate agents, banks, financial institutions, NBFCs, but who are involved in insurance operations, not the generic products. So we provide solutions which can complement your offerings and help you distribute insurance products better. And we were one of, considering our product solutions that we've offered, innovation that we've brought into the insurance market, we were recognized as one of the top 100 insurtech companies in the globally by Fintech last year. So these are the players I mentioned about, the key players that we service. We cover all the verticals in insurance. We are one of the few players who have solutions across different verticals. General insurance, in the outside, globally it is called PNC insurance, life insurance, and health insurance. And we operate in India, Middle East. Now we are expanding to the US, Singapore, and the South APAC markets as well. And in terms of the processes that we support product innovation, sales and distribution, underwriting, operations, and claims processing. So what I'm here to say is that we are a technology company, and there is a lot of potential in the insurance market. And if you intend, as fintechs, as banks, as financial institutions, as insurance brokers, if your intent is to build an adjacent model for insurance, because today the contribution of insurance might be low in your overall portfolio as banks and financial institutions. If you want to increase this, we are here to help, and we have our booth here too. You can come and discuss with us for how we can enable this for you. Thank you.
Thank you very much, Mr. Ramprasad, for a wonderful presentation which stated the key initiatives of IRDAI, role of banks and financial institutions, and trends in insurance distribution. And now I would like to call upon Mr. V. Ramkumar, Senior Partner, Siddha Management Consulting, to hand the token of appreciation to Mr. Ramprasad Sanjeev. I would request the dignitaries to join us on the dais, please. Can we have a big round of applause? Thank you, gentlemen. Thank you.